Let's talk business now with BNN Bloomberg's Paul Bagnell off a long weekend break. Paul, we missed you, but hope you had a good weekend.
I did indeed. Good to be back, though.
Yeah.
All right, Paul, good to see you. And you're here to sort of look into the future because coming up Wednesday morning, we're getting a Bank of Canada rate announcement. It's expected. Is it expected to cut or is it expected to hold? What are we thinking?
It's now expected to hold, Nick, and that's because of the gross domestic product numbers that came out on Friday morning, and they showed a stronger Canadian economy than economists had been forecast. And so many Bank of Canada watchers, and these include top economists at the big banks in Canada, have now changed their forecast. The bank had been expected to cut its benchmark interest rate on Wednesday morning, but because of that stronger than expected gross domestic product report on Friday, economists are saying that the bank doesn't now need to cut rates. So the reason to cut interest rates would be to stimulate the Canadian economy, to give a bit of a boost to a slowing Canadian economy. However, gross domestic product came in on Friday for the first quarter at growth of 2.2%, and that was stronger than anybody had expected. And so the thinking is now the Bank of Canada will not cut its benchmark interest rate on Wednesday morning. That's the view of Douglas Porter. He's chief economist at Bank of Montreal. He said we are officially abandoning our call of a rate cut next week. We now look for the next rate cut to be 8 weeks hence in the late July decision. So that will be the next Bank of Canada announcement after Wednesday, late July. That's when he sees a rate cut. Royal Bank of Canada also backing off its prediction of a rate cut on Wednesday because of those stronger than expected gross domestic product numbers on Friday.
Yeah, okay. We seem to be in a holding pattern now with this interest rate decision. And Paul, meantime, let's talk about our Canadian dollar. It's now trading above 73 cents US for the first time in about 8 months. Tell us more. Yes,
and that is related without much question to what we just talked about, and that's the Bank of Canada quite possibly not cutting its interest rate on Friday. Higher interest rates, all things considered, tend to be better for a domestic currency, and so that stronger than expected Canadian economy in the first quarter, the changed expectation of what the Bank of Canada will do, that is, i.e., not cut interest rates, those things are dollar positive. And so this morning, the Loonie is trading at 73.06 cents US, and that's the first time it's been above 73 cents US since October of 2024. So the Loonie's been on quite a run recently. As we've said in the past, most of it is to do with a weakening U.S. dollar. As the U.S. dollar weakens like a seesaw, the Canadian dollar rises. That's what's been happening for the past several months. But I think most recently, what we've just talked about is likely a driver of Canadian dollar strength.
Right. Only a couple seconds left. How are markets pointing this morning, Paul?
They are down. They don't like the renewed tariff talk from Donald Trump and the White House.
No doubt about that.
Okay, very good. BNN Bloomberg's Paul Bagnell joining us live. Thanks so much, Paul. We'll chat again tomorrow.
You bet. Thanks you.
See you, Paul. Headlines are coming up after this quick break.